Joining me now to talk more about the state of the market with earnings season nearly upon us is Jason Blackwell, Chief Investment Strategist at Focus Partners Wealth. Thank you so much for joining this morning from Atlanta. And how does this market look to you?
Yeah, thanks for having me. I think the best way to describe this market is there is a sense of complacency out there. We're seeing the tariff headlines. We're not seeing a whole lot of market reaction off of it, certainly not what we saw in April. But I'd also describe it as not particularly ebullient. We're not seeing investor surveys come out at particularly bullish levels. And so there may be a little bit of complacency, but overall, we think there's pretty solid backing to the earnings picture and to the economic picture.
Okay, let's talk about earnings, Jason, here, because we did hear from Delta earlier this week, NYSE-listed company, now in some ways sort of the unofficial start to earnings season, reinstated guidance. The stock was up double digits, a good pulse, I think, on the health of the economy and the consumer, knowing that consumer spending does drive 70% of GDP growth. What might that earnings report tell us about what we can anticipate over the course of these next few weeks as more results roll in?
Yeah, I think one of our expectations is, some of the consumer data that we've seen, or particularly the soft data, has been fairly soft. We've seen fairly reticent consumers as they're reporting in the surveys. The actual underlying economic backdrop has been generally fine. And so one of our expectations is to see that start to come through in the hard data of earnings as well. We don't believe that the consumer has stopped spending. We don't believe they've stopped going on vacation. And I think you saw that in the Delta report. I think you'll start to see that through the rest of earnings season as well, that the hard data hangs in.
Yeah, so we do have a Fed decision on tap at the end of the month. And of course, perhaps what we might hear from Jerome Powell is that now with a later tariff deadline of August 1st versus July 9th, that might lead to more wait and see. An approach like that, of course, as the Fed chair has referenced. How does that factor in?
Yeah, I think one of the things that everybody would love to move on from is the tariff story. And we keep getting these extensions, and really that's an extension of uncertainty, and I think that is making the job of the Fed much harder. But I also expect that that's largely priced in. I don't think anybody's really expecting the Fed's going to move in a meaningful way until they have greater clarity.
What does this mean for the dollar? Currency, I think, has become more of a topic of conversation maybe than in years past amid some of the volatility.
Yeah, I think there's a lot of importance in the dollar. I don't know that there's as much urgency to the dollar as what we're hearing from clients and as what we're hearing from a lot of the news outlets. I think it's important to remember that the dollar still represents 58% of global central banks. It still represents 85% of one-way currency trades. It's still the predominant currency out there. And that 58%, it's taken 25 years to come down from 70. And the next largest player is Europe at 20% of global reserves. We think this is a potentially long story. We may see the dollar not be the reserve currency at some point in our lifetime, but I think it's pretty hard to say that's going to be in the next 3, 5, or even 10 years.
Interesting. Let's talk about artificial intelligence because we know these technology names, despite probably leaning on the way down, higher beta, higher risk during the volatility that we saw in April, now actually leading to the upside as stocks do hover right near those records. Is the AI trade in play for you?
I think it is, but I think it's also broadened out. When you think about what happened earlier in the year and the AI names took a hit, what you saw was DeepSeek come out and people say, oh my goodness, do we need as much compute power? Do we need as much AI spend as what we had planned before? And DeepSeek really put a bit of a question mark on that. And I think the answer is clearly, yes, we're going to have the same amount of CapEx. We're going to have the same amount of AI spend. But it's going to become more accessible to a broader array of firms. And so, interestingly, it wasn't tariffs and all of that melee that started the non-US outperformance or even the value outperformance year to date. It was actually DeepSeek. And it was this recognition that financial services, utilities, all of these, otherwise boring non-AI sectors might be able to integrate AI faster and cheaper. I liken it back to, go ahead.
I was just going to chime in here and ask, the economy has seemingly held up relatively well, at least the jobs picture, inflation coming down. Any pockets worth noting here when you look at the economic picture?
Yeah, I think this economy is the one that everybody continues to underestimate. Jobs numbers continue to be solid. We continue to see manufacturing and services PMIs be, within a reasonable range. We're just not seeing the collapse that I think everybody assumed might come. We are going to be looking at the inflation numbers over the next couple of weeks or the next couple of months. Really to see we're looking for the same thing the Fed is. Are we seeing price increases, and are they one-time price increases, or do we have a more durable inflation trend to pick back up?
All right, Jason Blackwell, Chief Investment Strategist at Focus Partners Wealth. Jason, thank you so much for joining.
Thanks for having me.